invested in over 40 fintechs since inception. Now are raising also a sustainable finance fund. And then we also do syndications, co-investments that are all supported by this tech platform, and an advisory piece where we essentially provide monitoring and verifications for both financial and impact metrics to other investors. So if that's something you're interested in, my colleague Georgina is actually spearheading this. So please shout out to her if that is interesting for you.
Thank you, Claire. Maybe David, a bit of intro about yourself and your role at the NSE.
Good. Good afternoon. My name is David Wainaina, the Chief Operating Officer at the Nairobi Securities Exchange. I must add the best performing market in Africa in dollar returns as rated by Bloomberg. So ours here is to confirm that as an exchange, there's a lot of opportunities for fintech. And through this session, we want to have three things. One, to prosecute those opportunities as we make Africa an asset class. Two, we also want fintechs to come through the exchange as we look at the expansion strategy, because there are many things we have done, including appreciating that a fintech is not your usual company. You will have a company with a very good app. It may not have an asset, a physical one, but we are now pricing, that app and being able to bring it to the exchange. So, Erick, we are looking forward to a very, very fruitful conversation as we prosecute the opportunities for fintechs through the capital market, specifically through the Nairobi Securities Exchange. Thank you.
Thank you, David. My friend Eugene, maybe a bit of intro.
Sure. Thank you, Erick. My name is Eugene Teria. I'm co-founder and CEO for Second Stacks. We focus on infrastructure for capital markets by connecting investors, whether they're on the continent or abroad, through a single aggregation layer to all the capital markets on the continent. We have institutional focus for now, but we are also working on retail experiences. So everybody on the pyramid now has the ability to grow their nest egg through investments in the public markets. Yeah.
Thanks, Jim. Miguel, bit of intro about yourself.
Yes. Good morning, Miguel Azevedo. I work for Citi, as in Citibank, and basically work helping companies raise capital in the public markets, whether it's M&A, equity, or debt.
Thank you. Shuba.
Good afternoon, everyone. Chuba Ezenwa. Similar to Miguel, I work for another bank, Bank of America, global investment bank, global financial institution, and I run the investment banking business for Sub-Saharan Africa that is very much focused on, raising capital and advising companies and governments on various sort of strategic financial initiatives. Fintech is an area that is obviously a very big growth sort of sector for the region, and so very, very excited to have this conversation today.
Thank you. So just to go deeper into this subject, I have the privilege of knowing every of my panelists. We've done a couple of things not together before, and they are experts in the fintech and ideally on the capital market side. If you've been following what's happening on the capital market, there's a lot going on. And, from a global perspective, there's the geopolitical happenings. From an African perspective, there's the African governments looking to raise money across the globe locally, and, amidst all that, there's a lot of risks. I know people are exploring different options. And I'll want to start, by looking at what's happening in Africa, just to help the audience understand ideally what's happening or what we expect probably in the next decade or so, and what's the role of fintechs, to make the markets more accessible. I'll start with a general question, maybe clear first. From when you look at the last 4 years, we had the pandemic, whatever happened there. From a risk perspective, what do you think? How do you describe the African risk perception in the public markets, and there isn't happening geopolitical amidst all that. From when looking at local and global markets.
Yeah, no, great question. I think it's not a straightforward one, especially depending on where you play. Obviously, there have been, governments, African governments, Benin, Cote d'Ivoire, Kenya, who have re-entered the public markets recently, who have tapped the Eurobond markets. I think, that's what was needed at the time. But I think the fact that Kenya is raising at 10% is potentially quite indicative of global appetite for African capital markets. I think that there's question marks if that is sustainable over the long term, and frankly, not far from rates that we might be charging on private deals for earlier stage pre-profit fintechs. So I think it's if we look just more specifically at the fintech worlds, the global rate environment has definitely sent ripple effects throughout the space. I think we've seen global investors are able to tap into high yield credit opportunities in developed markets that are almost at par with developing markets, just because the market hasn't really corrected that fast. So that has potentially dampened a bit appetites. I think we're feeling it in terms of the funds, the pressure on returns that our funds are able to provide to our global investors. And if we look more specifically at borrowers, so the fintechs themselves, if your business is essentially built around being able to raise debt that is affordable to you, you're feeling that squeeze. And so it's, the environment has definitely put under pressure the viability of certain business models. Margins are being compressed, and that is either passed, inevitably to your customer, or it really taps onto your ability to survive. So yeah, I think from just general perspective, more so in the private markets, venture markets, venture capital space where we sit, I think risk perceptions are still somewhat wary. I think that, the funding environment is no surprise to this room, that there's obviously been a slowdown that is somewhat compounded by negative news in terms of governance questions, fraud cases. So it's not easy. It's not an easy time, but I think there are definitely, glimmers that could be smoothing in the future. I think we're, expecting Feds to reduce rates before the end of the year. So I think that will help alleviate some pressure. But I think it comes back to, and this is, a bit how we think about our investments, is risk return profiles are very context specific. And so there are opportunities for diversified, high return opportunities if you understand the risk and are able to structure for them. So we really champion this kind of data first approach. So we're able to essentially, quantify risks, look at past performance of fintechs. We integrate from a tech perspective with every fintech that we invest in. That helps us better understand, what we can expect in the future, and really step away from, maybe a blanket approach to risk perception on the continents to more context specific, and really unlock, high return opportunities.
Thanks, Claire. Still on data and risks, maybe I'll go to David. David, you are at the heart of the best performing stock exchange in the world, if I'm not wrong. And recently, you surpassed the trillion shilling mark on the bond market. And then probably one of the things that I also noticed is that the foreign inflows have increased, then the outflows have decreased. You speak to most of these global investors who invest in Africa and the local exchange. What are they saying on the risk side of things?
So yeah, and thank you for that, Eric. We have seen a lot of traffic coming in from our foreign investors, and I must say, this growth is a direct contribution to the role technology through fintech has played in our market. We realize that for investors to be able to access the market, one, they need to do it at the easiest possible way, and that's why from where we sit, we were very, very clear that we need to sort out our depository where these assets are sitting. So now it's very, very easy, regardless of where you are sitting, whether local or international, to be able to access through our web based platform at the central bank, have an account and be able to, invest in bonds. That has brought significant traffic from our foreign investors because, again, what we did is that from a legal perspective, it is very, very easy for you to have this account. So we made it easy from a legal perspective for our foreign investors. We also enable them from an infrastructure perspective. So the answer here is that there is a very, very significant role for fintechs in terms of making our markets vibrant. And we can confirm here that 1 trillion that we have witnessed as a market is because of what technology has played, Eric. Number two, we are also figuring out that there is an opportunity for fintech because moving forward, we have to tokenize our assets. We have come a long way where in Africa, the markets were manual. People are just shouting at orders. So we have moved that to, automated sort of an environment. Now we are at a stage where we need to tokenize that. And there's a very, very huge opportunity for fintechs to be able to support, especially on the payment side. There's no reason why an investor seated in Nairobi and an investor seated in Ghana should not be able to move this weightless asset in form of a share. So the payment side is what is stopping us. So from where we sit, there's a lot of opportunities for fintech, Eric, to come and address that gap from a payment perspective. Thank you.
Thank you, David. Speaking of cross-border, access of capital markets, Eugene is building one of the most innovative capital market software companies. I've known Eugene quite for a while. Experience, worked across global markets and is now building a platform that can enable broker dealers, retail and the infrastructure to access markets across the continent. Eugene, when you speak to your clients across the continent, what's their perception of risk around, say, why am I not investing in Kenya versus you? Like, what's their view around perception in Africa?
No, thank you. And David mentioned something very interesting, and we just came from the AFCFTA roundtable. When people think of trade on the continent, it's moving hard goods around. But you can't have an ecosystem that thrives of trade without the financing that goes with it. And of all the things that can move easily, it's your demutualized shares, it's your bond certificates. And so you think about the fact that these serve as the baseline for pretty much anything you can think of. That's how the central bank sets the benchmark rates because there is borrowing costs that the government has. If you are a company and you need to expand, you go to the commercial bank, and the commercial bank is saying, because you're a company, I'll take the government's benchmark rate and add a risk premium to it. And that's what they lend to you at. If you decided that was too expensive and you wanted to float your shares, you are giving away some portion of your equity on an exchange or through some mechanism like that to be able to do that. I think from an investor perspective, everybody has a need to put money away for the rainy day, but the how has always been a problem. So you think about the structure of finance today, people are always asking for what is new, what can I put my money in? And most of the hindrance, in my view, at least speaking to my customers, is we don't have enough opportunity and diversity if we are sitting in individual countries. And so second stacks in terms of what we are doing is basically creating an aggregation so you have more opportunity. If you like oil and gas, now we can give you oil and gas across jurisdictions. If you like telecom, you are able to do that. So now people can directionally think about what their interests are, see things that they are familiar with. Because most people use a mobile phone, so they know they're buying data, they're buying credit for voice. So if they are seeing, for instance, I'm sitting in Ghana and I have MTN and I see what is happening in Safaricom, I want that. And how do I get it? So that's the conversation we are having with our institutional clients in terms of designing processes that make it easier for those types of things to happen. Yeah.
Thanks, Eugene. Still speaking on risk and perception, Miguel, I know you interact a lot with global hedge funds, investors who want to invest in the African market, especially on the fixed income side. Like when you speak to these people, like what's their biggest risk or what's their risk perception on investing in African bonds, even when you do, when you're doing your deal making, both before the product is on the market, like what's their risk perception like on the continent?
You're not talking fixed income, yeah? That's what you said.
Yes.
Sorry, because it's hard to hear. Okay. Listen, it all starts with the macro side of things. As you were saying, Eugene, you need to have the markets need to be open for the sovereign. They've been closed for the last few years. They have reopened. In particular, Kenya here, for example, they have reopened a few months ago successfully. Not cheap, but successfully, and with massive impact. It's actually a great case study of once you take out the negativity of the sovereign not being active in the market, i.e., you reopen the market.
We have as many people participating in securities trading as practically possible and through the easiest way they can do. So what we are doing is to ensure that we grow our local and institutional local appetite. Currently, it's on 60-40 in favor of foreign traffic. So we want, at least for starters, to make that 50-50 with a view to make local more than. And this is the gospel to your point that we are spreading across Africa. We must be able to ensure that our people are investing in securities markets so that we can attract that capital. What that will do is that it's going to ensure that these private companies, serious brands, are going to use the public markets with the right valuations. Because the reason why they are not coming to public markets is because purely of valuations, because there's no demand side. So once we solve, and we are using this through fintechs supported, once we solve the local demand questions, then companies will come to the public markets for the right valuations. I think Kenya, and you can hold this into account because we are in a new strategic cycle. We want to resolve that and demonstrate that exchanges should be used as public markets for purposes of exits at the right multiples in terms of valuations through local demand, and foreign demand will come. So that's how we are solving this, Eric.
Thanks,
Erick,
David.
if I may add to what David says, and I obviously 100% agree on points made on valuation. There's also a capacity question, right? And all of that is somewhat of a cycle, right? One leads to the other, and the other leads to the other. I think that at the moment, African exchanges need, quite a bit of adrenaline to be pumped into the system to re-engage, investors that have been left on the sidelines for whatever reason, or frankly, never engaged. We're a very young continent, right? There are a lot of young people that have frankly never engaged with the public markets. I think, the governments have a big role to play in this context with, good quality assets that are still held in the government's hands, using that as a way to effectively re-engage the investor base. You've seen that frankly in the Middle East, right? Recently, all the first few IPOs that we've seen were all government privatizations. In Europe, going back, to the 90s, to Miguel's beloved Portugal, it was exactly the same. And we've obviously had a little bit of that in Africa, but I think there's now a need for a further round of privatizations of high quality assets that are going to deliver good returns and re-engage the investor base.
Good. Thanks for that, Hubert. Maybe over to you, Claire. Some of your portfolio companies, ideally, fintech and scale-ups that are having a challenge at, balancing between valuation and, because ideally when you look at it, if a fintech raises money from VC, the valuation is usually different from what's on the public market. So the fear is that, am I going to get a better pricing, private market or public markets? And some of these startups, ideally, or companies will prefer raising money via debt capital. As lender, but what are you guys doing, to to find a balance between raising money via debt, then eventually going to the public markets.
Yeah, no, that's a good point. And I think it's not only a question of price and valuation, it's really down to stage, right? And you have to raise in the place where investors are looking for, your type of risk return profile. I think it's important to note that most fintech debt financing in Africa are still being done on bilateral or syndicated but private basis. And so, yeah, I think that speaks a lot to just what is the stage of the industry. We've seen, if we've seen commercial capital, it's not commercial capital, sorry, commercial paper, which is more shorter term in nature. So I think that can be parts of, the capital toolkit for fintechs, but not necessarily the anchor for it, because ideally fintechs should raise, longer term capital that helps them, plan over time. So those are examples. I think if we're speaking about securitizations, there's certainly been examples too. Historically, the pay-go energy space has seen a few of these issuances. So there's Sun King, D-Light. I think Burn also issued potentially a public green bond, and then more traditional fintech. So you have MNC Halan in Egypt, Bayport, who is a frequent issuer, Us Plus also recently in South Africa. So those are great examples, and I think they're definitely innovations in the bond market, social bonds, green bonds. But I think we're still a bit away from public markets on the continent really embracing fintechs raising through public issuances. I mean, this is back to the points that you guys were making in terms of, the largest capital allocators are still very much risk averse and highly concentrated to governance. I think most of the securitizations I spoke about are still funded primarily by development financial institutions, potentially specialized players like Sunfunder, who are also backed by DFIs. So there's more and more, there are definitely commercial banks that are starting to play in it. I think Citi is one of those. So I think that's really, that shows a lot of the progress that has made. But I think fully funding these business models that are still seen as quite risky, purely with commercial capital, is going to be difficult. So yeah, I think there's still, I mean, in light of that, I think the public markets here are mostly banks, governments. I think the corporate bond market is still somewhat limited. So for fintechs who are potentially scale stage, growth stage, public listing might not really be the most relevant and appropriate tool at this stage. I think it's also important to note that most fintechs aren't really at the maturity stage that markets would expect. So I think in light of that, there's still a lot of demand on the private side. So we've deployed 100 million in 2023. I think despite the challenging environments, and we're still seeing, I think since we started doing this 10 years ago, there's certainly big development in the space. There's more and more funds who are starting debt strategies. So you've got working capital financing, revenue-based financing, invoice financing, venture, like pure venture debt. So that is definitely evolving. I think fundamentally, the ideal is still local currency funding, but there's not enough supply of that yet. So I think private capital and dollar-based capital still has to bridge us to that stage.
Thanks for that. As we wind up this session, I'll want to get everyone's brief comments on what they expect on capital markets and fintechs and everything that we've discussed. Like, what you expect in the next 2-3 years. Start with Claire.
Yeah, I think like 2 years is actually quite a short period of time. I think in the VC space, we thought 2023 was going to be a difficult year. 2024 has been even more difficult. I think things take time to change. There's certainly been a crop of larger fintechs that looked like they could potentially getting close to like a Jumia raise that have suffered, but I think those who have survived are coming out stronger. And so I think 2 years is probably quite a short span for companies like those to list, but I think there's diamonds coming through.
Interesting. You've said 2 years of such a short period, but I'll jump onto David because I know you are doing your new 5-year strategy, right? So, like, what do you expect after that particular strategy you've implemented? Like, what are your expectations?
So in 2 years, my expectation, our expectation really is that we will have a very vibrant capital markets that is sort of digital driven. I will not be surprised if from where Eugene and team sits, they give us an African full digital securities exchange where we can be able, one, to mobilize capital, and number two, we can be able to invest. I see a pronounced role in tokenization of all assets. I expect that most of our assets will go digital and they will be available in public markets in a digital way. Number two, I expect that in Africa, we will have a fintech board. And this board will be interesting because it is be an avenue where startups from a fintech perspective that I expect to be so many going forward will come in and, attract capital, attract investors. And number two, which is most important, will offer an exit mechanisms for the investors who came in at the first place. So expect a lot of activity on the fintech place. And finally, I expect that investors are going to use our fintech tools and an AI perspective for them to be able to make investment decisions. My expectation is that data is going to play a very, very pronounced role. There will be a lot of data science through fintechs so that investors, local and international, can actually be able to answer the question, where do I invest? That will be solved by fintech. So I expect a very, very vibrant fintech-driven capital markets in the short term, as a matter of fact.
Interesting. Over to you, Eugene. Like, what do you expect in the next five or so years?
And I promise I didn't pay David to say that about us. But I think we definitely are in that place where there is more understanding of fintech as a driver for a lot of the economic growth. We expect that we'll shift gradually from the consumption-based process to something that has financial independence that comes with being able to put some of that away as a reality. There's going to be user education, breaking things down, where anybody who wants to invest, actually, to David's point again, now understands what options there are. I always say if you can look at the behavior of the folks who are betting on sports and all of these other functions, the risk appetite is there. It's sort of figuring out what are going to be those productive uses of the capital that they have, and more importantly, the safer, more predictable ways for them to that money away. And I think the capital markets, with the growth that we are seeing and the awareness that fintech can get us there, should then really shift the ownership part in terms of the local population, both at home and in the diaspora, in engaging with these markets and making it really look very similar to what economics of these individual countries look like.
Thanks. So on to you, Miguel. Last year in DC, we were discussing around, at one point, I won't mention the name of the startup, but they came to you and they were doing a pre-seed round. And last year, it was one of Africa's biggest startup fintechs. I think they came to you around 2017, 2018. But you didn't expect them to become as big as they are now. Like, what's your prediction for the next 2, 3, 4, 5 years?
Well, listen, there's no shortage of great stories in the continent. I was talking to someone before that in this conference 4 years ago, I guess, in the DC one, I've met a company that has just raised $100 million on a $700 million valuation last week. So there's no shortage. This conference is actually very interesting in terms of spotting those new players. I think there will be more like that. I'm very confident. All we need now is the right macro environment. We need governments to embrace public markets in terms of not seeing them as a competitor to investing in government bonds, but as an additional fuel for the economy to create jobs, to create wealth. But at the same time, if you develop a capital market, this becomes a live barometer of what the government does. So it's sometimes people don't like that public scrutiny, don't like people coming here and making and writing about the country, writing about the local companies. But if you don't do that, you'll never break this cycle and we'll never go anywhere. So hopefully all those bottlenecks, all those regulatory issues will be eased out and we can allow the African ingenuity to attract the capital it deserves.
Thank you. Over to you, maybe Shuba. Your thoughts on your expectation and what you see happening in the next 5 or so years.
Sure, Eric. I think when we were over in DC early in the year, I think I talked a lot about I think 2023 was I would say a year of kind of resetting strategy in the context of the shocks that we saw globally and also in Africa, high inflation, interest rates rising, etc. And 2024 is effectively a year of execution. I still think that's sort of how there's definitely increasing, I would say, confidence in boardrooms and in management teams to really push on their growth strategies. And as Claire said, I think the winners in the broader technology fintech space are becoming clearer. And looking forward to 2025 onwards, I think you're going to see real growth. You're going to see more consolidation in the sector, right? And all of that is going to need capital. So I'd expect to see more funding rounds, and I'd expect to see at least one IPO of an African fintech company. Exactly where it would list, I think, is a different question. But I think very much looking forward to seeing that success story play now in the public market.
Good, good. Thanks everyone for making time. Thanks to my panelists. I hope you guys enjoyed the conversation and appreciate. And that's it. Thank you.